class, for this class, we'll be looking at basis period, and we have a lot to cover on basis period. So I said basis period, capital allowance. We'll be looking at capital allowance, and we have a lot to cover on allowance. Please, I don't know how fast we could go today, because we have a lot in terms of we need to understand our understanding on capital allowance. We need to understand the various types of capital allowance, the computation of capital allowance for assets acquired on hire purchase. This is very, very important. Disposal of relevant of business. Hello, class. Can you hear me?
Yes.
Please mute yourselves.
Yes, sure it's in the announcement.
Can you hear me also? I want to know if you can hear me.
Yes.
Yes, I can hear you.
Okay, if you can hear me. So we can start now. Our understanding on capital allowance, this is not new to us. Advanced taxation. Capital allowance directly, but we'll be asked to advise a client on tax exposure. And before we can compute a tax exposure, tax liability for any company, the company must have incurred QCE, assets, PE. Asset must have been subjected to depreciation. As a result of that, which is that these are liable expenses, capital allowance is granted in replacement of it. So definitely we should not our capital allowance perfectly well, because it's a relief granted against the accessible profit of a company. So class, we need to understand what constitutes PPE. What are the conditions that must have been met before a company can be granted capital allowance? We need to understand the various bases for capital allowance computation. There are some instances in which assets for a particular year of assessment for accessible profit purpose will be different from capital allowance computation purpose. A good example, asset that is being purchased in the year of commencement, whereas before the start modification, I have to apply the commencement rule. And this asset was purchased in a month that is equity that can be found in 2 years of assessment. So which year we enjoyed initial allowance first? Which year we enjoyed initial allowance? Whereas initial allowance is always granted once in the lifespan of the asset. We also need to understand that the various types of capital allowance along with disposal of relevant interest in and hire purchase agreement, capital allowance on hire purchase agreement. So class, when we start now, we're looking at the meaning of capital allowance itself. What do we understand? Capital allowance is granted to company which incurred qualifying capital expenditure. What do we mean by qualifying capital?
Sorry for interrupting. The background, some people need to be muted. So persons need to be muted. The background is very noisy.
All right. I'm doing that now. Okay, can you hear me now? Is okay now? Can you hear me now?
Yeah, we can hear you.
Okay, thanks. So capital allowance, the meaning of capital allowance, I said capital allowance is a form of relief granted to any company which incurred QCE during the basis period in respect of plant, property, and equipment in use at the end of the basis period for the purpose of trade or business. What do you mean by this, class? As a company, in any year of my assessment or in any year, I must have incurred PPE, plant, property, plant, and equipment, or fixed assets. Let's call it fixed asset now. To the accountant, whenever a fixed asset is being purchased, is expected to pass a depreciation on it, which is always a provision and estimate. And the tax authority look at it that this provision of depreciation, which is always against wear or tear or reduction in value of an asset for future purpose, for future reference. This depreciation is always liable expenses, not granted. And I've already incurred PPE. If this is not granted, added back into my profit, declared by the accountant. And I need to do an adjusted profit. When doing my adjusted profit, the depreciation has been added. They are now look at that. If you disallow my depreciation, you have to give me a relief against my PP, which involve a huge sum, a huge cost in this year of assessment. And capital allowance is granted in replacement. So capital allowance is always a relief to reduce the assessable profit of a company. After I've computed my adjusted profit, I derive my assessable profit, then I deduct the capital allowance claimable during the year of assessment. So capital allowance is always granted whenever I've incurred expenditure on my property, plant, and equipment. But for the purpose of tax, it is always called QCE, qualifying capital expenditure. This is also known as expenditure incurred on PPE in any year of assessment. Capital allowance is claimed against assessable profit by companies when computing their tax liability. It is only calculated when a company is computing its tax liability. Usually, when company prepares its income statement, they always charge the depreciation as an expenses before arriving at the profit before tax. However, there are different methods of calculating depreciation, which can affect how a company's profit is arrived at, which makes it inequitable, or which makes equitable calculation of taxation impossible. As such, when computing income tax, you must add back depreciation previously deducted by the accountant to the profit before tax before now applying capital allowance. So capital allowance is always a relief granted to a taxpayer that have incurred a capital expenditure on his property, plant, and equipment in the year of assessment. A particular year of assessment have incurred expenditure on property, plant, and equipment. As an accountant, I've charged depreciation as an expenses. The tax authority look at it that this is allowable expenses because it's provisions, does not really involve cash. When computing my adjusted profit, it is being added back. In replacement of this depreciation, capital allowance is granted. In replacement of the depreciation, capital allowance is granted. So capital allowance is have a relief to reduce my tax exposure, to reduce my tax liability in any year of assessment. So that's that on the meaning of capital allowance. Now we need to look at the conditions that must have been met before a company can be granted capital allowance, can be granted this relief. There are conditions that must be met before a company can be granted the relief. One, the taxpayer making the claim must own the qualifying capital expenditure. For any capital expenditure to have been granted, for capital allowance to be granted, I must be the sole owner of the asset. I cannot lease an item, or I cannot rent an item. A good example, building. I rent a building for transaction purpose. The rent cost should be passed as an expenses and allowable. But on the other hand, because building does not own this building, and I decide to be charging depreciation on it. No, it's only the rent aspect that will have to be passed as an expenses and is an allowable for tax purpose. So for any asset to enjoy capital allowance, it must be owned by the taxpayer itself. It must be owned by the company making the claim. Two, the QCE must be used for the purpose of the trade or business. We all know that for any organization to be allowed some of its expenses, the expenses must be solely, wholly, reasonably, and exclusively owned by the business for the purpose of its business or trade. If a company has a particular PPE, and this PPE is owned partly by the company and partly by a third party, let's say the MD, motor vehicle of the business, is partly used by the MD for his personal use and also partly used by the business for business purpose. Only the aspect or the percentage relating to the business that is claimable as capital allowance for that year of assessment. What this means is I have to compute the capital allowance for the year, then determine the percentage used for business purpose to generate the income or profit. And that will be the percentage of relief that will be granted by the tax officials during any year of assessment. Hello, class, are you with me at all?
Yes, you're with you.
Okay. The next one says, if the qualifying capital expenditure is more than 500,000, then acceptance of industry. What this is trying to say is that
Sorry, please, you are breaking. Hello. Please, can you come again?
Hello.
You are breaking. Yes. On
Can you hear me
this
now?
third one, yes.
Okay. What I'm saying is my certificate, the certification of fixed asset acquisition have to be obtained in as much the qualified capital expenditure is more than 500,000. What does this capital certificate shows? It shows that the company has incurred expenditure during the year. It is also a certificate to show new additional investment. Again, where the base period for any year of assessment or period is less than 1 year, example, where a commencement period or provision is applied, the annual allowance for the year shall be what? Shall be prorated accordingly. A good example, commencement should, before the Finance Act, the year of assessment is not up to 12 months. Let me say 4 or 6 months. For annual allowance to be granted, it has to be prorated based on the number of months and not be fully granted for the 12 months. These are the conditions for capital allowance. Now, we need to look at the various types of capital allowance. Under the various types of capital allowance, we have the first one is initial allowance. I'm too fast. We have a lot to cover. All these aspects are the revision, which I believe we should have understanding on before. I need to quickly cover it up. The calculation aspect, we need to cover it up today too. So sorry, I will reduce my my tempo now. Initial allowance under the various type of capital allowance.
Excuse me. Sorry. Please, that's as
Okay.
if QC is more than 500,000. You said there is a condition.
Yeah, the CAFA certificate. The certificate showing fixed asset acquisition. CAFA certificate. Hello, ma. Are you with me, ma?
Yes, I'm with you.
Though this CAFA certificate, not all organizations will always request for it. It depends on the kind of company, national companies or they are big companies. That I know that if I don't get it for assets for my fixed asset register, it will be needed for my expatriate quota. For me to get the expatriate quota, they will demand for my tax clearance certificate and any fixed asset acquisition for the previous year. And for this to be granted, definitely I need to get the certificate from the Inspectorate Division of Federal Ministry of Finance. Are you with me, class? So what this means is that if I can get it now, if the tax auditors, they come to my office, instead of me giving them my fixed asset register all over again to confirm purchasing, to confirm the owner, the asset certificate can also play the role. Hello, class, are you with me now?
Yes, sir. Yes, I can hear you.
Not all organizations will always want to go for the certificate of fixed asset acquisition, depending on if it will be used for other purposes and the cost. Imagine the cost of getting the officials down to your company for inspection, because they have to send the officials to inspect. They have to know if truly you purchase the assets. So the various types of capital allowance. What are the various types of capital allowance? One, I have my initial allowance. What are the rules guiding the initial allowance? One, initial allowance is always granted one-off. What do we mean by one-off? It is granted only once in the lifespan of the asset. And this is always when the asset was first purchased or first put to use. What do you mean by first put to use? A good example, I purchased an asset in 2001. I haven't started operation, commenced my operation until 2006. In 2006, this is where my companies commenced business. The first year in which initial allowance will be enjoyed will not be 2001, but 2006. Why? This is the year in which the asset was first put to use. This initial allowance is granted once in the lifespan of the asset. Initial allowance is granted once in the lifespan of the asset, and it is not prorated. It shouldn't be prorated. Initial allowance is a one-off relief granted in the first year of purchase of QCE or in the year in which the asset was first put to use. It is granted once over the useful life of the assets. That is initial allowance, and it has a rate for various classes or categories of assets. The next one is the annual allowance. The annual allowance is a tax relief based on the cost of the asset less initial allowance. Annual allowance is granted over the useful life of the asset. Annual allowance is granted over the useful life of the asset. Annual allowance has always been the cost of the asset minus the initial allowance I've enjoyed on the asset, then divided by the remaining number, divided by N. What is my N? My N is always 100 divided by annual allowance rates. For all categories of assets, I have my annual allowance rate. My annual allowance rate will determine the number, the useful life of the assets. A good example, an asset of motor vehicle that has 50-25 rate, that is 50% initial allowance, 25% annual allowance. If this asset costs me 500,000, the annual allowance, the initial allowance on it will be 50% of 500,000, 250,000. The annual allowance on it will be what? The cost allowance divided by 10. 100 divided by annual allowance. That rate is 25%. 100 divided by 25 is 4. So for the asset lifespan of 4 years, that is after
Hello,
the
sir.
first
Please
year.
come again. You are break. Hello.
No?
Please come again. The annual allowance, the calculation that you're saying, I can't hear you.
I said the annual allowance is always granted over the useful life of the asset. And I give an example of a motor vehicle, 100,000, and as
Can you please mute everybody?
As you increase the what?
Can you please mute everybody so we can hear you very well?
Madam Aderonke, you are my co-host. You can mute people. Madam Moji. Okay. Okay, can you hear me now?
Yes, sir.
Hello, we can't hear you. We can't hear you.
Okay, can you hear me now?
Yes, we can hear you now. Please, a quick question. The
Okay,
capital allowance rates, will they be given to you in the exams, or the examiner expect you to memorize it?
You should know it.
Okay.
Hello, can you hear me?
Yes.
Okay, sorry. So the annual allowance, as I said, is always the cost minus the initial allowance divided by the N. And what is my N? My N is 100 divided by annual allowance rate. It will be given. Though in the past, if your past question, the exam past question, ICAN, at the back of the past question, you will be given the different capital allowance rate. It will also be listed there. Hello, sir, can you hear me now? It will also be listed there, but the best advice is know the major capital allowance rate for motor vehicle, plant and machinery, furniture and fittings. These are the major ones. If an asset costs 500,000 and he has capital allowance rate of 50-25, 50% initial allowance, annual allowance of 25%. If the asset has always been in existence over years, the asset has been in existence over years, not a commencement business, I can quickly derive my annual allowance rate as 25% on costs. Hello, class, are you with me? I can derive my annual allowance rate as 25% on cost because the annual rate is 25%. On the other hand, if I have a commenced business, a company that just commenced business, a business, I can derive my annual allowance rate, annual allowance cost as the cost of the asset, 500,000 minus the initial allowance, which is 50% of cost, 250,000 divided by N. And my N, for me to know my N shows the total number of years, that is the lifespan of the asset, and is always 100 divided by annual allowance rate. 100 divided by 25 will give me 4. That means the lifespan of the asset is 4 years. Why am I using this? I'm using this because of assets that just commence business, because of a company that just commenced business. Let me say a company commenced business in the month of September 2002. In the month of September 2002. And this company also purchased an asset in the month of October 2002. This asset will enjoy initial allowance, motor vehicle. A good example, let me use motor vehicle, 50%. 50% on the cost will be the initial allowance. Now I need to charge annual allowance. If I'm to charge annual allowance, 25% of it, 25% of this 500,000. Hello class, are you with me at all?
Yes, sir.
Hello,
Yes, sir. Yes, sir. Yes, sir. Please.
1,000. What do I have? What is the 25% of 500,000 is what?
125,000.
125,000. 125,000. If the annual allowance is 125,000, meanwhile, the company commenced business in the month of October 2012, 2002 or 2012, as the case may be. And for this, I am expected to apply a commencement rule because this is the year before Finance Act. And the first year of assessment says from the date of commencement to 31st of December of that same year, from October to December, I only have 3 months. Definitely, the company cannot enjoy annual allowance of 12 months, which is 25% of the what of the 500,000, 125,000. So I need to do what? I need to prorate. So there is possibility of you prorating your annual allowance if the number of months is not up to 12, and this will only occur in a case of cessation, ultimate year, or a case of commencement, first year of assessment. Class, are you with me at all?
Yes, we are. Yes, we are.
That's it. On the other hand, I can also use the second formula, which says for me to get my annual allowance, it will be the cost minus the initial allowance divided by n. What is the cost? 500. What is the initial allowance? 250. Hello, class, are you with me? What is the initial allowance? 250 divided by n. N is the number of years. 250, we have a balance of what? Of 250 divided by n. 100 divided by what? By the annual allowance rate. 25%. 100 divided by 25 will give me 4. So 250 divided by 4 will be what, class? Hello, class? Hello?
Yes, sir.
Hello,
Yes,
class,
sir.
can you hear me?
Yes, sir.
So
0.5.
divided by 4 is what? What do you call it? 75,000 or 625. So that is it. Or what I'm saying in essence is I can decide to use depending on the question, depending on I'm looking at example in which an asset, motor vehicle, cost me 500,000. It has capital allowance rates as 50, 25, 50% initial allowance, 25% annual allowance. You get the cost initial allowance. Initial allowance for 50% times 500,000, which is 25, which is what? 250,000. My annual allowance cost will be the cost minus initial allowance divided by n, which is the what? The 500 minus 250,000 divided by what? N. N equals 100 divided by annual allowance rates. Hello class, are you with me? Which is 100 divided by 25 equals 4. So definitely, I have 500 minus 250 divided by 4. 500 minus 250 divided by 4 is what, class? 500 minus 250 divided by 4, I have 250,000 divided by 4. And what is the value, class?
62.5.
Can you hear me as well?
62.5. 62.
That is 62,500. That is it. This 62,500 is for 12 months. And I will charge 62,500 if the number of assessment, the assessable period, the base period is up to 12 months. On the other hand, to save this stress of calculating N, I can go this way, use this formula as in annual allowance equals to the cost minus the initial allowance times annual allowance rate. Cost minus the initial allowance times annual allowance rate. What is my cost? 500 minus 250 times 0.25. And what is the value? 500 minus 250,000 times 0.25. I still expect to get 62,500. Am I correct, class? Hello?
No,
Yes.
annual allowance rate is 20%, but you wrote 2.5.
25%. This is the 25. 50, 25.
Okay,
Yes.
25. Okay.
Yes. So it should be 62,500. Class, why am I using this? In the example, it's good to quickly apply this just to know. But why the N is needed here is because for me to know the total number of years I will charge this asset. That means the asset will enjoy annual allowance for the next 4 years. The first year, second, third, and fourth year. After the fourth year, I'm expected to retain 10 naira in my account, just to show that this asset has fully enjoyed its capital allowance, but has not been disposed. Hello, class, are you with me? Just to enjoy is a residual value, just to show that the asset still remains in the book. It still remains part of the company's property because it has not been disposed. That is that on annual allowance and initial allowance. The next one we need to look at is the balancing adjustment. Balancing adjustment for capital allowance. Under the balancing adjustment, I'll be looking in 2 areas called the balancing charge and balancing allowance. The balancing charge and the balancing allowance. The balancing adjustment is divided into balancing charge and balancing allowance. What is balancing charge? If a company disposes an asset, and makes a profit, if I dispose my asset and makes a profit, as an accountant, I'll be comparing my sales proceeds with the net book value of debt. That is, if the sales proceeds greater than the net book value of the asset or cash value of the asset, I will have a profit. And this profit is what? I will have a profit. And whenever I make a profit, the profit will be added as part of the other income of the company. The profit will be added as part of the other income of the company. Whereas from the tax perspective, the tax disallowed loss made on disposal of fixed assets. And at the same time, it does not tax any profit made on the disposal of fixed assets. That is for me to prepare my adjusted profit. If there is any profit or there is any loss made by the company on disposal of fixed assets, it will be disallowed and it becomes a non-taxable income. Rather, the company, the tax perspective, will have to calculate whether there is a balancing charge or balancing allowance. So what is balancing charge? Balancing charge is when the sales proceed is greater than the tax written down value. Balancing charge is when the sales proceed is greater than the tax written down value. What is my tax written down value? Tax written down value is the same as the cost of the asset less the what? The cost of the asset less initial allowance. Hello, class, can you hear me? Hello?
Yes, we can hear you.
Okay, I need to confirm this. The balancing charge is always the cost of the asset less the total capital allowance claimed or that has been enjoyed on the asset. Is the cost less the total capital allowance that has been enjoyed on the asset. Back to our example. If the cost of the asset is 500,000 and I enjoyed initial allowance of what? 250,000. I've enjoyed annual allowance of 62,500. Definitely, my tax written down value equals to the cost less initial allowance less the annual allowance. What is my cost? 500,000 minus 250,000 minus the what?
Excuse me, sir. Let
62,500.
me
I'll be having a
Hello?
pass. What will be the tax written down value?
Sir, can you please come back again? I didn't get that side.
Okay.
Sir,
What
before
I'm
you
saying
continue,
here
I have a
is
question. Can you hear me, sir? My question is on the annual allowance. That's the figure that we got, 62,500. Is it going to be the constant amount that you charge yearly, or you have to divide that by the number of years of the asset again?
no, that will be the constant amount you'll be charged yearly for the next 4
Okay,
years.
sir.
The only
Okay,
period
thank
where
you.
you can prorate 62,500 will be when the company just commence a business and the month is not up to 12 months. You have to prorate it.
Okay.
Hello, ma.
Thank
Can you hear me now?
Thank you. Yes, thank you, sir.
All right. So class, what will be the tax written down value on these assets? Hello, class, can you hear me? So what will be the tax written down value? If the asset is 500,000, the initial allowance is 250,000, and the annual allowance is 62,500. What will be the tax written down value?
187,500.
You didn't state how many years the asset has been in use for.
No, this is the first year. I'm explaining for the first year. The tax written down value
Okay.
for the first year. The tax
Okay, so
written
that
down
would be
value for the first year.
500,000
I have a
less
cost.
250,000 and 62,500.
Yes, the cost of 500,000, initial allowance 250,000, annual allowance 62,500, and the total tax written down value becomes this: the 500,000 minus 250 minus 62,500. So what is the balance, class?
187,500.
500.
187,000. Tell me, 187,000 what? 500. 187,500. This is 187,500. Let me now assume that in the second year, year 2, the asset is now eventually disposal value, for a sum of 400,000. For a sum of 400,000. Now, I need to know if the disposal value is greater than the tax written down value, I will have a balancing charge. Hello, class, are you with me? If the disposal value is greater than the tax written down value, this is the tax written down value at the end of year 1. It becomes the tax written down value brought forward for year 2, because the assets were not present till the end of year 2. It cannot enjoy annual allowance. You only need to calculate what? You only need to calculate balancing adjustment, whether balancing charge or balancing allowance. So balancing charge will become disposal value, sales proceed greater than tax written down value. And we have balancing charge. And we have balancing allowance. When the sales proceed is less than tax written down value, and we have balancing allowance. Class, what is the tax implication for balancing charge and balancing allowance? Balancing charge is taxable. Immediately I prepare my adjusted profit and I've gotten my accessible profits, I have to add balancing charge. It is taxable. It is taxable. The tax official will tax your balancing charge. Balancing allowance is a relief. It's part of the capital allowance relief. So the capital allowance that you will enjoy for any year of assessment or claimable will be the initial allowance plus the annual allowance plus balancing allowance and investment allowance, if any. Hello, class. Are you with me at all?
Yes, we are with you.
Yeah, with
So
me.
take the
So that
balancing
is the tax
allowance again.
implication.
Sorry, please, can you
I
repeat
can
it?
hear you.
Because you initially said the allowance was when it is greater than.
Yes, balancing charge. I'm explaining balancing adjustment. As a balancing adjustment is divided into balancing charge and balancing allowance. And I said if the sales proceed is greater than the tax written down value, I will have a profit. And for me to have a profit, it is called balancing charge. And the tax implication is it is taxable. You have to tax it. The tax official will ask you to pay CIT on it. That is the tax implication. On the other hand, if my sales is less than my tax written down value, I will have balancing allowance, and it is a relief. It will be used to reduce my taxable profit. It will be used to reduce my taxable profit. So the total capital allowance I can claim in any year of assessment will be the initial allowance plus annual allowance plus balancing allowance and investment allowance, if any, if present in that year of assessment. Any question, ma?
Hello, sir.
Hello? Can you hear me?
All of this, hello, can you hear me too? Hello, sir.
Yes. Yes, I can hear you.
I was going to ask all of these deductions, is there, the formula is not written in the notes that you've provided. Is there a way we can actually have that to support the revision, please?
Yes. As we move on, we work questions, you will get all the formulas.
Thank you.
All right. So the next one is balancing. We've discussed balancing adjustments. The last one, we've discussed the balancing charge and balancing allowance. We've explained the balancing charge is taxable, tax implication, and it's always when the sales proceed is higher than the tax written down value, and we have balancing charge. Tax implication, the tax implication is taxable to CIT. On the other hand, we have balancing allowance when the tax written down value is higher, that is, the sales proceed is less than the tax written down value in that year of assessment. So now investment allowance. What do you mean by investment allowance? Investment allowance is granted once per QCE at 10% of additions on plant and machinery only. Investment allowance is always granted on plant and machinery only, 10%. Now, class, there is a tax implication on investment allowance that we need to take note of. What is the tax implication? For me to determine the tax written down value of an asset in any year of assessment, please ignore investment allowance amount. Ignore investment allowance amount. Class, a good example, an asset, plant and machinery, cost me 1.5 million. Capital allowance rate, investment allowance, constant at 10%. Whenever there is you incurred QCE on plant and machinery, you are expected to charge investment allowance of 10%. Annual allowance, 50%. No, initial allowance 50%. Annual allowance, I have 25%. So class, total capital allowance I can claim on this asset, total capital allowance claimable equals to the initial allowance at 50% times cost. 700, is it 700 or 750? Is it 700 or 750? 750,000.
750,000.
Annual allowance. Hello, can you hear me?
Yes, sir.
The annual allowance is cost minus initial allowance times annual allowance rate, and the value will be 1.5 minus 750,000 times 25%. Class, what is the total value? That is 750 times 25% is what? Please, the value. What is the value?
187,500.
Is what?
187,500.
187,500. Investment allowance. 10% on cost. 10% of 1.5 is what?
150,000.
150,000. Class, the total capital allowance claim in this year of assessment will include my initial allowance of 750 plus annual allowance of 187,500 plus the investment allowance. Again, now, if I want to determine the tax written down value of this asset, it will only be the cost minus initial minus annual. I'm not expected to deduct investment allowance. Hello, class, is this clear, class? For me to determine the tax written down value of the asset is cost minus the initial minus the annual. Do not deduct investment allowance. Hello, class, is this clear, class?
Yes, sir.
Yes, but to determine the total capital allowance I can claim, in that year of assessment, it will be the initial allowance plus the annual allowance plus the investment allowance. Investment allowance is always 10% on cost. It's also granted once in the lifespan of the asset when the asset was first put to use, and it's always 10% whenever there is a purchase on plant and machinery during that year of assessment. Is this clear, class?
Yes.
Any question, please?
No.
No. Okay, class. So that the various rate for capital allowance. I have building, qualifying capital expenditure, the initial allowance, and the annual allowance. Building, industrial and non-industrial building. Industrial and non-industrial building. The initial allowance rate is 15%. The annual allowance rate is 10%. That for any building, land is not subjected to capital allowance. It's only the building aspect that will be subjected to capital allowance. So the building, both industrial and non-industrial building, I have 1510. The mining, for any mining operation, capital expenditure on mining expenditure, I have initial allowance of 95%. It is called accelerated initial allowance of 95%, and no annual allowance will be charged. The remaining 10% will be kept in the book until the asset is fully sold. Until the company sold the asset. That means I will not charge annual allowance. In the first year, when the expenditure on mining expenditure is incurred, I will charge 95% initial allowance. Annual allowance is new. The 10% is kept in the book to show that this asset is present in the company. It has not been disposed. Now, if the asset has been disposed, I have to compare between the sales proceeds and the tax written down value, which is always the cost minus the 95% initial allowance will give me the tax-rated value to determine whether there is a balancing charge or balancing allowance. For any plant equipment, the correct equipment will be, is it for agricultural production or is it for other operation? If it's for agricultural production, it also has initial allowance and the annual allowance rate is 0. But if it's other production, other companies, it has 50-25, 50% initial allowance and 25% annual allowance. Furnitures and fittings has 25-20, 25% initial, 20% annual. Motor vehicles, if it's for public transportation, 95% and 0 annual allowance. If it's for other purposes, not for public transportation, 50-25. Plantation equipment, 95%. Housing estate, 50-25. Ranching and plantation, 30-50. And research and development, expenditure, qualifying criteria expenditure that is put for research and development, capitalized, 95% initial allowance, annual allowance 0. Basis for capital allowance computation. Okay.
Sir, these rates, is it advisable that we memorize them, or in the exam they will be given to us?
The more you do capital allowance, you practice capital allowance question, the more you know those rates. Majorly, you should know for plant and machinery, furnitures and fittings, and motor vehicle. Hello, are you with me, sir? Plant and machinery, furnitures and fittings, motor vehicle. Very, very important. In the exam hall, it's possible at the back of the question, you will be given the various capital allowance rates. It will be listed. Hello, sir. Are you with me, sir?
Yes, sir. Yes, sir.
Can you hear me?
Yes, sir.
All right. So that's that. The next one, let's look at the base period for capital allowance. Class, why do I need the base period for capital allowance? I need the base period for capital allowance because of asset allocation for initial allowance purpose. Asset allocation for initial allowance purpose. That is which year of assessment we enjoyed my initial allowance. Which year of assessment we enjoy my initial allowance. I purchased an asset in the month of October 2002 before the modification made by the Finance Act. I'm expected to apply and my business commenced in the month of what? In the month of November 2002. All assets purchased before the commencement of the business will be assumed they were being purchased as at the first day of the business. As at the first day of the business, I bought an asset in the year 2006, and my business commenced in the month of November 2007. All the assets purchased in the year 2006 will be assumed they were being purchased as at the first day in which I commenced my business, and it will be subjected to what? To initial allowance in 2007 year of assessment. How? Class, let's quickly look at this example. I have an asset. I have an asset that were being purchased motor vehicle. I bought motor vehicle when 1/1/2002 for a sum of 500,000. I bought plant and machinery in the month 1/6/2007 for a sum of 300,000. I also bought furnitures and fittings in the month of 1/8/2007 for a sum of 300,000. My business commencement date is the month of June 1/6/2007. Class, looking at this, if the company commenced business in 1/6/2007, 1/6/2007, this is before the Finance Act. I still have to apply the old rule, which is the Finance Act, the the commencement rule, the year of assessment, my basis period for assessable profits, basis period for capital allowance, and asset allocation. The asset allocation for capital allowance purpose. If I commence business in 1/6/2007, under my commencement rule, I'm expected to apply the rule, and the first year of assessment will be 2007. His base period will be from the date of commencement 1/6/2007 to 31st December 2007. The second year of assessment will be 2008, which have to be 1/6/2007 to a 12 calendar month, and the 12 calendar month will be 30th 5/2008. The third year, which is 2009, will be based on PYB. I assume that this company is ending his account every 31st of December, accounting year end. Every 31st of December. The PYB for 2009 is what? 2008. And this company should end the 31st December. The account will have started 1/1/2008. As a 1/1/2008, as the company commenced business, yes. So I need to apply. The company commenced business in 2007. I need to apply the exact PYB rule, which is 1/1/2008 to 31st December 2008. So class, now my basis period for capital allowance. If I did not do the basis period for capital allowance, I want to determine the initial allowance. Meanwhile, remember, I said the initial allowance is granted once in the lifespan of the asset. When the asset was first put to use, this asset was purchased in 1/1/2002. 1/1/2002. Asset that was purchased in 1/1/2002, have I commenced business? No. In 2002, I've not yet commenced business. 2003, I've not yet commenced business until 2007. All this asset that was purchased in 2002 will be assumed they were being purchased as at the first day of business, which is 1/6/2007, and will be what? We enjoy his initial allowance when the asset was first put to use. If I have not yet started business, though I've bought an asset of motor vehicle in 2002, but I haven't started the business to use the motor vehicle for. So what it means that I will enjoy the initial allowance when the asset was put to use, and the year it will be put to use in 2007. Hello class, are you with me at all?
Yes,
So
sir.
class, what I'm saying in essence is, look at these plants and machinery 1/6/2007. An asset that was purchased in 1/6/2007, if I'm to allocate using my assessable profit basis period, 1/6/2007 is present in 2007 year of assessment, is also present in 2008 year of assessment, 1/6/2007. So which year we enjoyed initial allowance? Which year we enjoy initial allowance? Does it mean that I should ignore 2007 and charge initial allowance in 2008? Or I should ignore 2008 and charge the initial allowance in 2007? What happens here is called overlapping or coincidence of base period, and this always comes out, or these issues is always being found in commencement issues, commencement rule. An asset that was being purchased in a particular month, and this month can be seen in 2 or 3 years of assessment. So the rule says that you allocate asset to the first year, that is the year that comes earlier. Hello class, are you with me at all? You allocate the asset for the year that comes earlier. So the base period for capital allowance will be in the first year. I have to repeat 1/6/2007 till 31/12/2007. For the second year, it will start a day after the end of the first accounting period under basis period for capital allowance. A day after the end of the accounting period under base period for capital allowance, and it will end here. It will end in the accounting period of the second year of assessment. Hello class, are you with me at all?
Yes, sir.
Hello. Yes. So for this, I'll be having a day after 31/12/2007 will be 1/1/2008, and it will be end 31/5/2008. As a result of you using the capital allowance basis period rule, you've eliminated what? Repetition of months. You've eliminated repetition of months. The month from 6 June to December 2007, which can also be seen in 2008 year of assessment, 6 to June 2007, has been eliminated. And what this is that you are able to what? To remove those months that coincide, that is overlapping. And for the third month, we have a day after the end of the current one, a day after this, which is 1/6. 1/6. 1/6/2008 to when? To 31/12/2008, till the end of this accounting period. And after you've gotten the base period for capital allowance, you can then allocate your assets. How will I allocate my asset for initial allowance? I will use the base period for capital allowance to determine the initial allowance computation, to determine which share of assessment we enjoy initial allowance. Asset that was purchased in 1/1/2002, in which the company has not yet commenced business, the rule says that the assets will be assumed they were being purchased as at the first day of the commencement of the business. So this motor vehicle will be, we enjoy its initial allowance in 2007 year of assessment. So we have motor vehicle at a cost of what? 500,000. That means in the initial allowance on this motor vehicle will be enjoyed in 2007 year of assessment. This asset 1/6/2007 that were being purchased in 1/6/2007, as a result of using the capital allowance base period to allocate, 1/6/2007 is being found in the second year of assessment. So it will also be in 2007 year of assessment. Plant and machinery, how much? 300,000. For the third one, furnitures and fittings, 1/8/2007, it's also in the first year. Furnitures and fittings, 300,000. What I'm saying in essence is that the basis period for capital allowance will be used to allocate asset to determine initial allowance computation. But after you've determined the initial allowance of your computation, to know which year of assessment precise we enjoy initial allowance, going forward, you will now need to use your base period for assessable profit for the number of years to prorate annual allowance, for the number of years for proration of annual allowance. Any question, class?
Sir, can you please explain the capital allowance again? Because he said the first year that it will be first of beginning of the year to the end of the year. Why the second one again? You repeated what is it? I did not get that part. Please explain. The basic period for capital allowance.
The base period for capital allowance for the first year, this exactly it is in the first year. 1/6/2007 to 31 December 2007. Repeated.
Hello.
Is this gotten?
Hello.
Hello, I can hear you.
Mr. Lecturer, see, all we have been trying to talk to you are not listening.
So what is it? Do you have any question, please?
You are talking to yourself. We can't hear you now. And when we try to ask questions, you don't respond.
Others can hear me. Maybe it's your network. Class, can you hear me at all?
I've started question in the chat. You didn't even respond.
Okay, what's the question?
I don't know. You are too fast. Everything you said, I'm confused. I don't even understand.
Yes, sir. All right, sorry. I'm too fast. Is that
the explanation, the basis period, all the basis period, all the calculations, all the basis period for capital allowance? I didn't understand anything there. From there, I'm completely lost.
Okay.
Your voice is faint. Your voice is faint.
I'm coming.
Hello, sir.
Hello, can you hear me now?
Yes, we can hear you. I think the problem is maybe you have a class after us, right? So I think you're trying to be fast so that you meet up. I think maybe if you give us time,
My concern
I don't even
is
know how to.
Okay,
Okay,
Mr.
be
Lecturer,
here with us.
the essence
Let
of
us
the class for
follow
us to
you.
understand. I don't think I'm not understanding
Let's
as far as
move
I'm
along.
concerned. I since a lot of people will not talk. People like us will talk. I can't be pretending when I'm not getting anything.
okay. I'm repeating here all over the capital allowance computation for basis period. Hope you can hear me now.
Yes.
Yes. What I'm saying in essence, for capital allowance computation, there are rules guiding it, and the rules goes this way. One, the major reason why I need the capital allowance for base period is for initial allowance. Remember, I said initial allowance is granted once in the lifespan of the assets. Do you understand this, sir? And initial allowance is always when the asset was first put to use. And I have an asset that were purchased in different year of assets, in different months. I'm using this as an example. I said I commence business. Commencement of business is in the month of June 2007. Hello, sir. Can you hear me now?
Yes, we can hear you.
In the month of June 2007, the company have its accounting year end as every 31st of December. Is this got in class? So now,
Yes.
as out of it, I've commenced business. I purchased QCE assets. And when I look at the date I purchased the assets, I have a motor vehicle that was purchased in 1/1/2002 for a sum of 500,000. I have plant and machinery that was purchased in 1/6/2007 for a sum of 300,000. I also have furniture and fittings that was purchased in 1/8/2007 for a sum of 300,000. The question now is, how will I determine the year of assessment for initial allowance computation purpose? Which year will enjoy initial allowance? If I go this way, I have my year of assessment. I have the basis period for assessable profits. If I'm to use the basis period for assessable profits, if a company commence business as at 1/6/2007, the 2007 is before the Finance Act. So I'm expected to use the commencement rule. Are you with me, sir? Can you hear me, sir? Hello?
Yes, yes.
Yes, I'm expected to use my commencement rule. If I'm using a commencement rule, what year will be the first year of assessment if a company commenced 1/6/2007?
It will be 2007.
2007. And the commencement rule says the basis period for it. I have 2007. The commencement will say from the date of commencement to 31st of December 2007. The second year of assessment is 2008. It says from the date of commencement to a 12 calendar month.
Yeah.
Is this clear, sir?
Yes.
The third year says on PYB. And the PYB, the company is ending its accounts when? Every 31st of December. The PYB for 2009 is 2008. This account would have ended 31st of what? December 2008 and started in a 12 calendar month, 1/1/2008. Is this clear, sir?
Yes.
Back to my question. I need to charge initial allowance for this asset. If I want to use the basis period for assessable profit, not applying the base period for capital allowance year, I will be confused. How? I have an asset that was purchased in 1/6/2007, plant and machinery for 300,000. I also have an asset that was purchased in 1/8/2007 for 300,000 furnitures and fittings. Now, if I can see which year of assessment will I see 1/6/2007, this 1/6/2007, which year of assessment will I see it? It will be seen in 2007 year of assessment. I have 1/6/2007 year. It will also be seen in 2008 year of assessment, 1/6/2007. And the question is, I cannot charge initial allowance in 2007 and also charge initial allowance 2008. It has to be charged only once in the lifespan of the assets. So which year will I charge initial allowance? Hello, class.
You charge in 2007.
Why am I charging in 2007? Because of what? Overlapping of basis period. Overlapping or coincidence of base periods. The rule says you charge to the earlier of the two. The rule says you charge to the earlier year, the ones that comes first. So to avoid this, I might be in the exam hall and be confused. I might be in the exam hall and be confused, or I've forgotten the rule. I've forgotten the rule. It's better for me to apply or to find the basis period for capital allowance. Are you with me now, sir? Can you hear me?
Yes, yes.
It's better for me to apply or to find the basis period for capital allowance. How will I get the basis period for capital allowance? The capital allowance basis period for capital allowance. The first rule says for the first year of assessment, still 2007, I'm expected to repeat the base period for assessable profits. I will repeat all this. Are you with me, sir?
Yes,
I will repeat all these base periods. So it will be 1/6/2007 till 31st December 2007. Is this gotten?
Yes.
Yes. For the second year, which is 2008 year of assessment, the base period will start a day after the end of the current one. A day after 31st December 2007 will be what?
1st January 2008.
Well, 1st January 2008, which is 1/8/2008. Where will it end? It will end at the end of the period. No, it will end here. Hello, are you with me, sir? It will end here. It will end where the base period of the assessing profit of the second year ends. Hello, are you with me, sir?
Yeah, yes.
Do you understand? So it will end.
Yes, I understand.
So I will not pick 31st. Hello, I'm with you.
The second basis period for capital allowance, it should be 1/1/2008, sir, not 1/8.
Sorry, it's a mistake.
Okay.
1/1/2008. Is it okay this way?
Thank you.
Okay.
Yes, thank you, sir.
Do you understand up to this extent?
Yes.
Yes. For the third year, it will start a day after the end of the current year capital allowance basis period. A day after 31st May 2008 will be what?
1st June.
1st June 2008. And where will it end? It will end where the base period of the assessment profit will end. 31st December 2008. Class, as a result of this, I've eliminated repetition of basis period in those months. You can see that this ended this. It started the following day. It ended here. By this doing, if I use my capital allowance base period to allocate assets, I will not have the issue of thinking or having an issue of, I don't know which month to put it. But in the example, if I'm familiar and I know the rule, I will know that if there is any overlapping or repetition of base period, it should be applied to the earlier year. The initial allowance will be enjoyed in the earlier year. Is this gotten now, sir?
Yes.
Any other question? No. This then allocation of assets for capital allowance. Allocation of assets for capital allowance. For capital allowance. Well, these assets they were purchased. This now a motor vehicle that was purchased as at 1/1/2002. This is before commencement. It is before the commencement of the business. It will be allocated to the first day where the asset was put to use. As at 2002, the company have not commenced business. He only brought the motor vehicle down. The motor vehicle, I cannot charge depreciation because there is no transaction. In 2003, I cannot charge depreciation, there is no transaction until 2006, where I started my business. So the asset will be allocated for 2007 year of assessment. Hello, sir. Is this gotten, sir?
Yes, it's gotten.
And the other plant
But
and
this,
machinery.
the write-up here is rough from this QCE to initial allowance. I can't.
It's the same thing here. Do you understand it here?
Yeah.
Yes. So the motor vehicle here now, we have motor vehicle for 2007. For motor 2007 motor vehicle, what is the cost? 500,000. It means it is in 2007 I will charge a cost of 500,000 for initial allowance. Is this clear now, sir?
Yes.
So back to our question. The question says, Sanity Limited has been in business for many years. Again, this is a question in which the company has been in business. The company is not commencing. He has been in business, preparing his account to 30th June annually. That his account has always been prepared to every 30th June. It incurs qualifying capital expenditure as follows: date of asset purchase, date of purchase and the cost. A motor vehicle was purchased in 1/1/2006 for 500,000. Plant was purchased in 8/7/2006 for 600,000. Another motor vehicle was purchased in 1/6/2007 for 300,000. Furniture 3/8/2007 200,000. The question states, say the base period for capital allowance, the amount for qualifying capital expenditure for each year of assessment. Class, this is exactly what we need to do. Before I can go ahead, I need to determine the year of assessment. This is a going concern company. It is not yet commenced business. So the first year of assessment should be preceding year basis. Everything should be on preceding year basis. If an asset was purchased in 1/6/2006 and the company is ending 30th June, I can decide to pick 2006 as my first year of assessment. His basis period will be from 1/7/2005 to 30th June, no, 1/7/2004 to 30th June 2005, because it has to be on preceding year basis. The company is already an existing company. Hello, are you with me, sir?
Yeah.
Yes. This, I'm not applying commencement rule. I'm not applying cessation rule. What I need here is just to determine the year of assessment in which I will allocate my assets. Then I need to prepare capital allowance computation. Can we do this now?
Yeah.
The year of assessment, basis period for assessable profit. Basis period for capital allowance. Assets allocation for initial allowance. Let me put the cost here. First year, I can put 2007 or 2006, 2008, 2009, 2010. Hello, class, are you with me at all? The company ends its account everywhere, every 30th June. Every 30th June annually. The company is ending its account every 30th June. If this company ends its account 30th June, what is the preceding year for 2007, 2006? When is this company ending this account? 30th 6. The account would have started when? 1/7/2005. Am I correct, class? For a preceding year company already in existence. This is not a commencement rule. Hello, sir?
Yes, yeah, correct.
Okay, the same thing will apply here. A day after this, 1/7/2006 to 30th 6, 2007. 1/7/2007 to 30th 6, 2008. 1/7/2008 to 30th 6, 2009. Class, now the base period for capital allowance. Under the first year, I'm expected to repeat this. 1/7/2005 to 30th/6/2006. Is this got in class? Hello, sir. Can you hear me? Hello?
Yes, you can hear you.
For the second year of assessment, a day after the end of this, a day after it is what? 1/7/2006. And it will end this accounting period, 30th/6/2007. For this, a day after this, 1/7/2007, it will end in this accounting period, 30th/6/2008. A day after this, 1/7/2008 to 30th/6/2009. Class, if you look at it here, you will observe that I'm having the same basis period for capital allowance as the same basis period for accessory profit. Why? This is an existing company. The company does not have any abnormal basis period here. He has eliminated the issue of what? Issue of commencement until if we decide to cease operation, then he can have an abnormal basis period. Hello, are you with me, sir?
Yes.
Yes. Back to the question, all the assets that were purchased, when was the first asset purchased? The first asset, motor vehicle.
2006.
2006. If I 1/1/2006. So what I mean here is that is the capital allowance basis period that you will use to allocate the asset. It means an asset that was purchased in 1/1/2006. 1/1/2006. What year of assessment can I find or can I see 1/1/2006?
2007 year of assessment.
2000 year of assessment. So this motor vehicle will enjoy his initial allowance in 2007 year of assessment. So in 2007, I will have motor vehicle. How much is it? How much is the motor vehicle? 500,000. Hello, are you with me, sir?
Yes.
Yes. The second one, the second asset, when was it purchased? Plants. Plant was purchased in 8/7/2006 for a sum of 600,000. So I have to go back to the capital allowance computation base period. Where can I see 1/8/7/2006? 8/7/2006.
2008 year of assessment.
2008 year of assessment. That means the initial allowance will be enjoyed in 2008 year of assessment. Plant. For a sum of 600,000. Next one. Motor vehicle is the next one. A new motor vehicle was purchased for in the month 1/6/2007. 1/6/2007, 300,000. So in what year of assessment? 1/6/2007. If I'm to use this, 1/6/2007, where?
It's still 2008.
2008. So I have to have motor vehicle. That means there is an additional motor vehicle of 300,000 that we enjoyed initial allowance. The last one, I have furniture. The furniture is 3/8/2007, 200,000. 3/8/2007. What year of assessment will I see 3/8/2007? 3/8/2007. 3/8. This 3/8. August is in 2009.
2009 year of
assessment. So it will be, that is furniture. Hello, class. Do you understand? So what we are explaining here is all these assets will enjoy their initial allowance in different year of assessment. So in 2007, I have motor vehicle of 500,000. In 2008, a plant will enjoy its initial allowance of 600,000. Then an additional motor vehicle was purchased, in which I have to charge initial allowance of 300,000. In 2009 year of assessment, another mode, a furniture was purchased in 200,000. Class, if I'm to do the capital allowance computation for this asset, it will go this way. asset purchase. Motor vehicle was purchased. Plant and machinery, right? Plant and machinery and furniture. There are three items. Plant and machinery, then furniture. Then we have the total capital allowance claimable. Initial allowance, annual allowance, and investment allowance, if applicable, because there is a plant and machinery that was purchased. Back to our note, what is the different rate that is being applied to those assets? We have motor vehicle. The motor vehicle orders, because it's not for public transportation, it has 50-25. That means the initial allowance is 50%, annual allowance is 25%. Plant and machinery orders 50-25 also. Then I will apply investment allowance of 10% because plant and machinery was purchased. Furnitures and fittings 25-20. Is this got in class?
Yes.
Yes. So the initial allowance will be 50-25 dash 50-25, 10% investment allowance 25-20 dash. So what year of assessment? The first year of assessment in which those assets will be subject to tax is 2007 year of assessment. 2007 year of assessment. Motor vehicle 500,000. In 2007 year of assessment, I have a cost. Cost on what? On motor vehicle. How much is the cost? The cost is 500,000. Hello class, can you hear me at all?
Yes, sir.
Yes. The cost is 500,000. So we have a cost of 500,000. In 2007, do you have any do you have any plant and machinery? No. Do you have any furniture and fittings? No. So it will be dash, dash. Then initial allowance will be charged. What is the initial allowance? What is the initial allowance? The initial allowance on motor vehicle is 50%. So 50% of 500,000 is what?
250.
Sorry, I have a question. Sorry.
Okay, what's the question, sir?
This investment allowance under plant and machinery, you put 10. Is no extra motor vehicle that was bought for 10? I mean, that was bought in the same 2.8.
No. What I'm saying in essence is that all these are just the various items. The heading shows the various.
But the 10% under plant and machinery enjoy investment allowance. You know, when you have bought additional assets that you enjoy investment allowance, the additional asset was on motor vehicle.
No, investment allowance says whenever you incur the expenditure on plant and machinery. In 2008, do we have any plant that was purchased? Yes, 600,000.
Investment allowance only related to plant and machinery.
Yes, only.
Okay.
Investment and it is once in the lifespan of the assets. Investment allowance will only be applied to plant and machinery only. So back to our solution. So we have 250,000 here. Annual allowance. What is annual allowance? Annual allowance says cost minus the initial allowance times annual allowance rate. Hello class, do you understand what I'm doing here? What is the cost? The cost is 500,000. Initial allowance is 250,000 times the annual allowance rate. How much is the annual allowance rate? 25%. So 500,000 minus 250 times 25% is what?
437. 250. And 0.25. 62,500.
62,500, right?
Yes.
Okay. Class, again, there's something we need to understand here under the annual allowance. If I'm charging 62,500, hello, sir, can you hear me now, sir?
Yeah.
Yes. Annual allowance says, for me to know the annual allowance, it is the cost minus the initial allowance times the annual allowance rate. Formula 1. I need to put it this way. Yeah. I can use this method. The cost the cost minus the initial allowance times annual allowance rate, or cost minus the initial allowance divided by N. And what is my N? N equals the lifespan or useful life of assets. And for me to get this is always 100% divided by annual allowance rate. What is the annual allowance rate? The annual allowance rate is 25. 100 divided by 25.
For you to get the N is life cost over annual allowance rate.
No, the N is 100 divided by annual allowance rate. 100% divided by annual allowance rate. 100 divided by 25% will give me 4.
Yeah.
What does this mean? It means that I can enjoy capital allowance for the next 4 years. After the 4th year, I cannot enjoy capital allowance on that asset anymore. Do you understand this, sir?
Yes.
Yes. It means that definitely what this is trying to explain here is that for this particular asset motor vehicle, it will enjoy annual allowance in 2007. It will enjoy annual allowance in 2008. It will enjoy annual allowance in 2009, 2010. After 2010, you can no longer enjoy capital allowance on this asset. You are expected to keep 10 naira into the account. What does this 10 naira shows? It shows that the net book value of the asset is 10 naira, the value of the asset at that period. It only shows in the book that the asset has not been disposed, but you've enjoyed all the necessary relief that can be granted on that asset. Hello, are you with me, sir?
Yes.
Yes. So what is the annual allowance for this first year? 500 minus 250 divided by 4. 62,500, right?
Yes.
62,500. Then I will have my tax written down value. Tax written down value. Class, for the tax written down value, it is the cost minus the initial minus the annual allowance. 500 minus 250 minus 62,500. What is the value, class?
187,500.
187.
500.
500. Back to the 2007 year of assessment. As I said earlier, when computing my tax liability, the tax liability says this: net profit, adjusted profit. I need to get my adjusted profit first. Net profit as per account, that is the net profit reported by the accountant, then less or add back all disallowable expenses, depreciation and the likes. When you add it back, I want to get my adjusted profit. For my adjusted profit, I will get my assessable profit by applying the relevant basis period. Immediately I apply my relevant basis period, I've gotten my assessable profit. After my assessable profit, class, I'm expected to less capital allowance claimable in that year of assessment. This will give me my taxable profit. It is on this taxable profit that CIT of 30% or 20% will be applied. Now the question is, from this our working, I need to determine what is the total capital allowance that I can claim in 2007 year of assessment. What is the total capital allowance I can claim in 2007 year of assessment? I can claim initial allowance of 250,000. Class, are you with me? I can also claim annual allowance of what? 62,500. What is the total capital allowance I can claim, or the total relief that will be granted, or not because I purchased plant and motor vehicle in 2007 year of assessment? So it's 250,000 plus 62,500 will give me the value. Class, do you understand what I'm explaining at all?
Yes, 312.
Yes, yes, sir.
So what's the value?
312,500.
312.
500.
Is this got in class?
Yes.
Then, after 2007,
Hello, sir. What of if the hello, sir?
Okay.
Is it what of if the question is giving us net loss?
Net loss as per what? As per account.
Instead of net profit. Is it all the time it gives us net profit?
No.
Or
No.
well, the question the
Okay,
examiner can twist it as net loss.
If it is being given net loss as per account, what does this mean? It means
Yes.
that the accountant has declared a loss. Before the accountant declare a loss, he must have arrived at he must have deducted some expenses and also added some income. Those expenses that are not taxable, those expenses that are not allowable, and those income that are not taxable, you will have to do your adjustment to get your adjusted profit. Let's now still assume that you arrive at adjusted loss. Your net, the adjusted is not a loss. This capital allowance is the capital allowance is claimable, is your right. If you are not being given in this year because of you make a loss and the tax authority cannot share part of your loss, this capital allowance can be carried forward till next year. Hello, are you with me, ma?
Yes, sir.
If it is a loss you have in your accounts, you can carry capital allowance till next year. It becomes unrelieved capital allowance brought forward. It has not been relieved in last year. Does it mean that I will dash the government? No. It means that I can carry forward till next year until I have a profit. Then it will be used to reduce my accessible profit. Hello, sir, ma? Is this clear now?
Yes, I have a question.
So what's the question, please?
I'm sorry, this annual allowance, please, is it possible for them to give us the number of years that the assets is the useful life of the assets? Is it possible for them to give us the years?
Looking at the rate, no. Looking at the rate, you already know the number of years. This rate is constant. For every furniture and fittings, they have an allowance rate of 20%. How many years will be the lifespan of the asset? 5 years. 100 divided by 20.
So you're saying that in the question, it's not possible for them to give us the useful life of the assets?
You only be given the annual allowance rate and investment allowance rates.
Okay.
Hello, sir.
Hello, I'm with you, sir.
Hello. A question where we are given like a motor vehicle has been used for three years, plant and machinery remaining 2 years, and there is disposal. So how are we going to treat such question?
Such question, you want us to quickly move, no problem. What will happen in such question? An asset has been given. An asset, you have the assets, has already used 3 years. Motor vehicle, tax written down value is given. Tax written down value will be given. What is the tax written down value? 500,000. And the question says that this motor vehicle has used 3 years. Hello, are you with me, sir?
Yes, sir.
It has used 3 years. For every motor vehicle, how many years is the lifespan?
The motor vehicle is
4. 100 divided by 25. 4 years.
Yes,
How many years is remaining? If it has already used 3 years,
it remains 1
year. That means you are only charging capital allowance for the remaining 1 year. Let's now assume that you now give a disposal of 700,000. For you to get your balancing charge or balancing allowance, you compare your disposal with the tax written down value to know whether you are making a gain or loss.
Okay.
Again, if you have a question that says the tax written down value is 500,000 and it has 2 years remaining, Hello, do you understand what I'm saying at all?
Yes.
It has 2 years remaining. If an asset has a value of 500,000 now and it has 2 years remaining, that means its capital allowance will be 500,000 divided by 2. After the second year, the value of the asset should be 0. Because of tax purpose that has not shown the disposal, you have to keep it as 10 naira. 10 naira is irrelevant. It's very insignificant. So in such question, If we are giving tax written down value of 500,000, an asset has 2 years remaining. For you to know the capital allowance that will be charged in that current year you are working for, just divide the 500,000 divided by 2, which is 250. That means the asset will enjoy capital allowance of 250 for the remaining 2 years. Hello, ma. Any
Yes,
question,
sir.
ma? Is it clear?
Yes, sir.
Okay.
Can continue, sir.
All right. So
Thank
now
you.
I have my tax written down value as 312,500. This is clear and gotten. So after 2007 year of assessment, what will be my next year? 2008 year of assessment. In 2008 year, sir, are you with me, sir? Hello, class. Can you all hear me? So we now have the issue of repeating, or coming.
Yes. Thank you, sir.
Yes.
I still have motor vehicle, furniture, plant and machinery, and furnitures and fitting. Total capital allowance. Now, after 2007 year of assessment, I should be having 2008. Let me assume I have 2008 year of assessment. Tax written down value brought forward. Which asset has a tax written down value that is being brought forward? Motor vehicle of how much? 187,500. Hello, are you with me, class?
Yeah.
Yes. Brought forward is motor vehicle 187,500. For plant and machinery, I don't have anything. For furnitures and fitting, I don't have anything. Now, back to the question. I have a plant that was purchased in 2008 for a cost of 600,000. This plant will enjoy initial allowance, it will enjoy annual allowance, and also enjoy investment allowance. Are you with me, sir? Additional motor vehicle was also purchased in 2008. That means this motor vehicle that was purchased in 2008 will enjoy initial allowance, will enjoy annual allowance. Hello, class, can you hear me?
Yes, we're with you, sir. Right on.
Okay. Tax written down 187. Cost additional. What are the additional? I have plant 600,000. And I also have motor vehicle 300,000. Furnitures and fitting is dash. Initial allowance. The initial allowance will be enjoyed on the new motor vehicle that was purchased. The initial allowance will be enjoyed on the plant motor vehicle, the plant and machinery that was purchased in 2008 assessment. How much is the capital allowance rate? 50-25. 50-25. It still remains 50-25. That means initial allowance will be 50% on 300,000, not 50% on the tax written down value. Hello, class, are you with me at all? And
Yes, sir.
50% on,
we are.
okay. Annual allowance. Under the annual allowance, just for a better understanding, I have an annual allowance on this asset that was purchased in 2007. The annual allowance will be enjoyed for the next 4 years. It has enjoyed one in 2007. It will enjoy in 2008. That means for the annual allowance, let me say the old asset. How much is the annual allowance? 62,500. I will have 62,500. Annual allowance, the new asset that was purchased. How will I get the annual allowance for the new asset? It's the same thing as the old one. The cost minus initial allowance times annual allowance rate. The cost minus initial allowance times annual allowance rate. What is the cost? 300,000 minus 150,000 times annual allowance rate. What is the annual allowance rate? 25%. So class, what is the value? 300 minus 150 times 25%.
57,500.
60 what?
37,500.
37,500. And for this plant and machinery that was purchased, it will enjoy initial allowance. It will also enjoy annual allowance. It's not an old, it's a new. Under it, it will be cost minus initial allowance times annual allowance rate of 25%. 600 minus 300 times 25% is what?
75,000.
75,000. Class, are you all with me? Then, because plant and machinery was purchased, that plant and machinery is entitled to investment allowance. Of how many percent? Of 10% on cost. Class, to avoid issue or to avoid error in the example, as I said earlier, I said investment allowance should not be used to determine the tax written-down value of an asset. You are not expected to reduce or to minus investment allowance from the cost for you to determine the tax written-down value. But for you to determine the total capital allowance that is claimable in that year of assessment, include investment allowance. So investment allowance will be 10% on cost. 10% of 600,000 will be what?
60,000.
60,000. Let me put it here. What is the total annual allowance for the new item? 37,500 plus 75,000 is what?
$112,500.
112,500. And I have for the old item 62,500. For the annual allowance, 150 plus 300, that is 450. So the total capital allowance the company can claim in 2080 of assessment is the initial allowance, the annual allowance, and investment allowance. For the tax written-down value in 2008 for plant and machinery is only cost minus initial minus annual. Do not deduct investment allowance when getting your tax written-down value for plant and machinery. Class, do you understand this, please?
Yes, sir.
Any question?
The total capital allowance is 685,000.
685,000.
5,000.
Tax written-down value 187,500 plus 300,000 minus 150 minus
machinery is 225.
for
Plant and machinery is 225,000.
225,000. And for this, for motor vehicle,
250.
60.
250. I mean, sorry, 50,000.
For the tax written-down value. It's not possible.
Sorry.
500.
One. Why 87,500 plus 300,000
237,500.
237,500. Class, do you understand up to this extent?
Yes, sir.
Yes. Then for the last year, I should have for 2009 year of assessment. For 2009 year of assessment, motor vehicle, plants and machinery, furnitures and fittings, total capital allowance. For plants and machinery, I have 2009 year of assessment, tax written-down value brought forward. What is the tax written-down value brought forward? For motor vehicle, 237,500. So I have 237,500. For plant and machinery, 225,000. 22. In 2009, furniture was purchased. Class, are you with me? Furniture was purchased. That means in 2009, I'm expected to enjoy capital allowance on my furniture. So I have a cost dash 200,000. Initial allowance. What is the capital allowance rate for furniture? The capital allowance rate for furniture is what? 2520. 2520. That means 25% initial allowance. 25% of 200,000 is what, class?
50,000.
50,000. So we have total capital allowance of 50,000 that will be enjoyed. Annual allowance. Annual allowance. Class, move back. You can see that for this asset that was purchased in 2008, annual allowance of 62,500 was enjoyed. In 2007, it was purchased. Annual allowance was enjoyed. In 2008, annual allowance was enjoyed. In 2009, it will still enjoy his annual allowance. In 2010, it will enjoy. After 2010, everything should be 0 or 10 naira. Are you with me, class? That means you can only enjoy annual allowance for good 4 years. So on this, what will be the total annual allowance that will be enjoyed? Why I said that was purchased in 2008 is capital allowance lifespan, or the total number of years it will enjoy capital allowance will be 2008, 10, 11, and 12. So for the motor vehicle, what is the total annual allowance that will be enjoyed? 62,500 plus 37,500 is what, class? 62,500 plus 37,500 for the old one and the new one that was purchased.
100,000.
100,000. So we have 100,000. And for plant and machinery, it still remains 75,000. Are you with me, class? 75,000. Yes. 75,000. So, and for furnitures and fittings, remember, cost minus initial times annual allowance rate. What is the annual allowance rate? 30,000, right?
Yes, 30,000.
So I will have my tax written down value. Tax written down value for this. Then what will be the total capital allowance that will be enjoyed in 2009 year of assessment? 50,000 naira initial allowance on furnitures, 100 plus 75 plus 30. What is the total year? Total annual allowance that will be enjoyed?
205,000.
205.
205. So total capital allowance is 255.
Class, do you understand this? So the value, what will be the value here? The tax written down value.
So that one is 120. For furniture and fitting is 120. Sorry, furniture and fitting. I meant furniture and fitting 120.
Motor vehicle 137,500.
137,500.
Plant and machinery.
150.
150.
Okay, class. This is how you.
So the annual allowance for furnitures and fixings is giving me 75,000.
200 minus 50,000 times what is the rate? The rate is very, very important. The rate is 20%.
The rate is 50%. Okay.
So 20, 25, 20, 25, 20. Hello, ma?
Okay, I've gotten it.
Any other question, please?
Yes. In in year 2009.
Okay.
As against our presentation in year 2008, what I observed is that the annual allowance was captured for only furniture. The annual allowance, yes, exactly, fine. If you see what we have in 2008, we have aggregate of annual initial allowance, annual allowance, old and new, before investment allowance, then coming down to tax written down value. But when we got to 2009, the presentation differs, because what I was expecting is that in the year 2008, this is actually what I was thinking the presentation should just be.
Yes,
so I need a clarification on that.
Okay, sir, we can present it that same way. Old 62. We will still have another old. This motor vehicle, I have 37,500. Addition of the two is how much? 100,000. Hello, are you with me, sir?
I'm with you.
You're with me. In 2009, was there any additional investment on motor vehicle? No. There is no any additional investment on motor. It is the previous old one, which is the one that was purchased in 2007 and 2008 year of assessment. Addition give 100,000. Hello, are you with me, sir? If you want it that same way,
I'm with you.
If you want it that same way, the major reason why I did it like this is just for us to understand better why I'm charging 62,500 and I'm also charging 37,500. because there is an old asset that I need to enjoy, that I need to charge 62,500. It's the same way as me eliminating this old, putting the annual allowance as 100,000. But will I be able to understand that in the next 4 years, 62,500 should not be charged, only 37,500? That is in 2012 year of assessments. Hello, sir, are you with me, sir? Sir, you want the presentation to look this way? Hello, can you hear me at all?
Yes, I think your explanation now I've gotten it. Yes, with what you've just said, I'm okay.
Okay. Okay, any other question, please? Hello, class, any question? No question. Okay, class, that is that. You can finish it up. You can finish it up. That's that on annual allowance.
No, finish it, please. Finish it. Finish that one comprehensive example so that it will guide us in subsequent ones.
Okay, no problem. This is 2009. After 2009, what will be the next year? 2010. Hello, class. 2010 year of assessment. So 2010 year of assessment. In 2010, back to this notepad. In 2010, no new asset was purchased. But the only thing that will happen is
hold on, sir. Hold on a minute. So that's 2009. Let me see something. That 29, the one you initially, okay, 137,500, 150. Okay, I'm fine.
Fine. 2010 year of assessment. Tax written down value. What will be the tax written down value? I have for motor vehicle, furniture and plant and machinery.
Only one question. See how accounting.
Furniture and total capital allowance. Tax written down value. I have 137,500. 137,500. Then this 150,000. 120,000. 120,000. Annual allowance, class. No new asset was purchased. I can only charge initial allowance if I have a new asset that was purchased. Annual allowance, what will be the annual allowance? The 100,000. Why? Asset that was purchased in 2007. We enjoy his annual allowance in 2007, 2008, 2009, and 2010. After 2010, no longer no allowance. So I will still have to charge 100,000 here. Guys, are you with me? Then for this, I will charge the 75,000. And this, how much was charged as the annual? 30,000. Hello, class, are you with me at all?
Yes, sir. I want to ask a question.
Okay.
I thought we were supposed to deduct 10 naira from that annual allowance as regards the first asset, since it's 4 years this thing. So the tax down value would have 10 naira balance or something.
Yes, we can deduct it for book value, book entry. Are you with me, sir? For book entry, just to show that the asset has not been disposed. You show that the asset has not been disposed. So I can charge 99 naira. 99,000. Is it 99,000? Or yes, it's 99,009. The same value. Hello, class, are you with me at all? So how much am I charging here then?
99,990.
99,990. So what will be the tax written down value? Tax written down value. And we have, this should be 90,000. 150 minus 75. I will have 75,000 here. And what will be the value here, class? Class, please tell me.
So I did not get where the 10 naira is coming from. Is it in the question?
No. This is it. Remember, I have an asset. This asset was purchased when? 2007. Hello, ma. Are you with me, ma? Hello, can you hear me,
Yes,
ma?
I can hear you.
The asset was purchased in 2007. In 2007, he enjoyed his 62,500 allowance relief. In 2008, he enjoyed his relief. In 2009, he enjoyed his relief. In 2010, which is for 4, you can only enjoy capital allowance for 4 years. Why? The annual allowance says 25%. 100 divided by 25 will give me the total number of years, which is 4. And the 4th year is 2010. As at the 4th year, has the asset be disposed? No. So there is a need for me to show in the book that this asset, though he has fully enjoyed his capital allowance, but the asset still remains as part of the property of the company. Hello, residual value. Hello, ma. Hello, can you hear me? So class, give me the value, please. Your calculator, punch.
37,510. 37,510. 37,510. 510.
This is the tax written down value. Tax written down value. And what will be the total capital allowance?
To be 99,990. Yes. 71. Yes. 204,990.
2011 year of assessment. Tax written down value. 37,510. 75,000. 90,000. Annual allowance. This asset in 2011 is to be fully enjoyed. So we have what will be the annual allowance here. How much am I charging on monthly basis for this? 37,500. So it will be 37,490, right? 37,490. So I'll be able to have 20 naira as the tax written down value. And that 20 naira will show for the first asset that was purchased, the second asset that was purchased. Hello, class, are you with me at all?
No, you didn't get this.
This is the
You didn't
asset.
get this.
This asset was purchased in 2008. Hello, sir. This asset was purchased in 2008. In 2008, he enjoyed his capital allowance 9, 10, 11. And I'm now in 2011 year of assessment. If you observe here, I should have charged 100,000. If I charge 100,000 here, I'll be left with 37,500. Is it 550 or how much do I have here? 37,500. Are you with me, class? But because I need to keep 100, I need to keep 10 naira. I need to keep 10 naira here. And this 10 naira give me 37,510. I charge 99,910 to keep the 10 naira for the first asset that has been fully depreciated, fully enjoyed. Capital allowance has been fully enjoyed, but it has not been disposed. Now, this 10 naira still remains in the book. And this other asset also is lifespan will end in 2011. The annual allowance should be 37,500. But because of the 10 naira that I need to keep, I'm charging 37,490. Hello, class, are you with me? So this 20 naira will show for the first asset of this that ended here, and the second asset that ended here. Hello, class, are you with me here?
Yes.
And here, how much will I charge here? I still need to keep 10 naira here because this will be the lifespan. It will be 74,990. Hello, class, are you with me?
Yes.
Yes. And this, I have to charge my 30,000. Then I will have 60,000 remaining. Hello, class, any question here?
Not here, but I have question.
What's the question, please?
Okay, if you go back to the question, the first motor vehicle, the date was given, the date of the acquisition is 1st of January 2006. So are we going to give full capital allowance for that year, or we'll just give the half year from the date of acquisition to the end of that year?
For that asset, hello class. Hello, ma. Ma, you with me, ma?
Yes, I'm with you.
Yeah. Okay. On that asset, if you go back to the question, the company is already an existing company. Am I with me? The company is already an existing company, not a commencement question.
Okay.
Not a commencement question. This company has been preparing his account for over several years. The reason why I did the capital allowance for the basis period for capital allowance is just only for allocation of assets. Had it been the basis period, is not up to 12 months. Basis period for accessory profit, is it up to 12 months or not? Motor vehicle from 1/7/2005 to 30/6/2006, is it up to 12 months?
It is not.
Yes, yes.
I don't need to prorate. Had it been the base period is not up to 12 months, a good example on commencement rule, definitely I will prorate the annual allowance for the first year of assessment.
Okay.
Then,
okay. Then my second question, this basis period, I was confused when I initially started because I thought anything before the 2020 Act we're supposed to be using that year as basis period, not preceding year.
No.
Or we should just take it as anything. Even if it's 2001, we should be using preceding year.
The basis period rules, we have two types: normal basis period and abnormal basis period. For all normal basis period, it must have 12 calendar months. It must be on preceding year basis. Hello, are you with me, ma? It must have 12 calendar months. It must be on preceding year basis, and there must be consistency in its basis period. Because commencement, change in accounting dates, and cessation does not have all these characteristics, that makes it to be abnormal basis period. And that is the reason why we have rule for basis period for commencement, change in accounting date, and cessation.
Okay. All right. Thank you.
I have a question. Sorry, can you hear me? I have a question. Back to the last year, 2011 year of assessment. The recent one we just completed. What of the capital allowance cost total capital allowance? You are not putting any figure there.
No, we haven't. We wanted to. You haven't given me. That is the reason why I have not put it. So what will be total capital allowance? Annual plus all the annual
Excuse
allowance.
me, sir.
Okay.
I have a question.
Okay, what's the question?
Please, the question has to do with the annual allowance charge for the assets motor vehicle, the 37. Because I just joined actually 37,510. I understand all the principles, but this particular one, the 10 naira retention on the asset, I understand that, but I want to understand this 37,490. How did we arrive at that, or what is the principle?
We have 10 naira that was being retained in 2010 on an asset that ended in 2010. We also have an asset, a new asset that was purchased in 20. Okay, sir. This asset was purchased in 2007. As at 2010, I should retain 10 naira. Are you with me, sir?
I can hear you. I'm with
the
you.
lifespan will be up to is 4 years, and the 4th year we end in 2010. I retain 10 naira here. I retain 10 naira in this year. Where is it? This year, I retain 10 naira. Instead of me charging 100,000, I charge 99,990.
I got that.
And I also retain 10 naira here.
On this same asset or the addition, I want to understand this particular.
On this addition, there's an addition here. There's addition in the 2nd year, 2008, in which his basis period will end in 2012. So I still also retain another 10 naira. The amount I should have charged is 37. How much is his annual basis? 37,500.
37,500.
Because I need to retain 10 naira. I have to charge 37,009. Is it
490?
Yes. So definitely
Okay.
I'll be having 20 naira retainership fee.
Okay, noted.
For the old item and this new one. Any other question, please?
I'm fine. Thank you very much.
I have a question as well.
The capital allowance value I've not reached 142,480.
142,480.
480.
142,480. Okay, any question, please?
So I have a question.
Okay.
Say we now have 2012 year of assessment, and this motor vehicle, we disposed one of them, based on the fact. I'm just saying hypothetically, say we dispose one of them. In what we our TWDV is 10 naira. Will we still enjoy balancing allowance and balancing charge on it?
You will. If you dispose less than 10 naira, you are entitled to your allowance of how much? The value you sell is 8 naira. Let's assume you sell at 8 naira and it has a tax duty value of 10. So the balancing allowance is 2. But if you dispose at 200,000, what is the balance? That means it's chargeable. 200,000 minus the 10 naira residual value, the tax duty value.
Okay, so we'll see our balancing charge on it.
Yes, reason being, you've already enjoyed all your capital allowance. You are now selling at a profit. The tax authority will want to share on part of your profit.
Okay, sir, I get that.
But under this case now, when we get the capital gain tax, you cannot be subjected to capital gain tax and also be subjected to CIT. Are you with me, class? Hello?
Yes, I'm with you, sir.
Under the capital gain tax, the capital gain tax is the less the operating cost. How much did you sell? How much? Hello, class. When we get there, we'll explain. Any other question? They're having a class very soon. In fact, it should have started now.
Okay, 2012 year of assessment. 2012 year of assessment.
The 2012.
Yes.
No, that's fine. So motor vehicle, I have motor vehicle, plant and machinery, furnitures of thing. Back down value. So year of assessment. This is naira. After this, I have 10 naira. I have 60,000. Annual allowance, dash. Hello, class, are you with me? 30,000. The capital allowance, 30,000. 30,000. That's 50 down value. The same 20, the same 10. 2013 year of assessment, tax written down value. I have 20, I have 10, I have 30,000. Class, are you with me?
Yes, sir.
Yes.
Allowance, dash. What will now be 29? 29 what?
999.
990. So I'll be able to have 10 in there here.
Okay.
Any other question? Is this clear now, class? You know the reason why I'm having 20 here?
Let's write down.
Hello?
This 2013 year of assessment. What?
Okay. I'm with you. Okay, I can hear you, sir. Sir, why? Talk. I can't hear you again. You wanted to ask a question.
Motor vehicle should be 20, sir.
We cannot see the other write-up below it. After 2013 tax written down value, we can't see the other write-up now below it. Can you scroll up?
It should be 2010 then.
Yeah, but the
29.
other write-up, there's something you wrote down that I can't see.
Tax written down value. This is tax written down value. That's all. Tax written down value is 2010, 290.
So all of the furniture, are you not providing for 2014?
No, as at 2013, how many years does he have? It has 25, is it 25, 20? Yes, it has 4 years. And what year did we start? He started enjoying his capital allowance in 2009. So it will have 2009, 10, 11, 12. So after 12, no need of me enjoying calculating capital allowance on it again.
Just scroll down. Let's see the
That's
last
5 years. 5 years. This is it. It has 5 years. So in 2013 is the last year.
There's something you wrote down. Is it 299 something? The
29.90.
right hand side.
Sorry, it should be 29,990.
29,990. Yeah, I don't understand.
Wow.
Sorry. No,
It's
under the
29,990. 29,990.
Yes.
You have a total of 20.
Yes. Sir, correct the one under furniture and fittings as well, please. Sir, correct the one under furnitures and fittings. You've corrected under total.
Yeah, 2013 shows complete computation now. Despite is above, is more than 4 years, but this other figure here is not clear.
Okay, I'm coming. Let me write it. Maybe you didn't see, let me clean everything up.
The 2013.
2013 year of assessment. Tax written down value. I have 20, 30,000. Are you with me, sir?
Yes,
Annual
yes.
allowance. Dash 29,990. What is the total capital allowance? 29,990. 990. And I will have tax written down value. Tax written down value. 20. This will also be 10, and this will be 10. Is it clear now, sir?
Yes.
Any other question, please?
Sorry, sir. If perhaps venture we lay our hands on some questions and we're able to solve it and we are finding it difficult, can we forward it to you for solution? Can you help us solve them?
Forward, yes, you can forward. We are not through with capital allowance. We still have capital allowance on higher purchase.
Yes, I'm talking about this one that we have
Yes, the major concern is
Stated.
to understand how we compute capital allowance with this. Yes,
Yes,
you
that's
understand
what
how
I'm
we
saying.
compute capital allowance with this. Then let's go further to questions that have to do with higher purchase capital allowance. If there is any asset that were purchased on second hand purchase, how will I charge or how will I enjoy my capital allowance? If there is any asset that were partly used by the business and partly used by private use, that is other uses, how will I enjoy or charge capital allowance? Is this clear, class? Hello?
Hello, sir. Yeah,
Yes, sir.
we are clear, sir.
All right. So we complete this capital allowance next week.
Hello, sir.
Hello, sir.
Kindly share the worksheets. Can you hear me, sir?
I can hear you.
Yes, that's my request, actually.
Worksheet, okay. I will.
Thank you, sir.
Thank you.